This is the second part of our three-part series on the tax windfall issue here in the State House. Les, share with us exactly how this affects the individuals in our state.
Okay. First, I would like to say the term windfall kind of misleads people, and also it's being spun in certain circles that we're cutting taxes by doing this decoupling for individuals. Quite the opposite is true. If we do nothing, then taxes will necessarily increase. And I think that's what we want to try to avoid. And the taxes that are increased on individuals would actually be on middle income and below. Because with the $24,000 standard deduction on the federal now, there will still be a lot of wealthy people who will be able to itemize because of mortgage interest and other expenses and things like that. But it will be just the middle class and below who will be hurt by our inaction if we don't change it.
So it really hurts us average people out here that can't hit that level and be able to use the tax system.
Absolutely.
So, Stephen, you're the chair of the tax committee. What's the feeling in the tax committee about this issue? Because you're in tune with what they're thinking, and we really don't know that because we're not a part of your committee.
You know, I think it's pretty similar as across the state. The one thing, we're looking at those details, we have a sense for that. This tax issue is very different from the others that we had. The fact that the federal change happened on top of a state change confuses a lot of folks as they look at that, but these are all consequences that were not intended, and actually some are counter to what we tried to achieve in the state tax plan. So our job is just to dig into the details, look at who is impacted, do we intend to continue that impact, or how do we best balance the tax burden across all payers. Those who have a large amount of itemized deductions would have the same impact, but those with smaller amounts would be the one picking it up. So if I have $7,500, which is the standard deduction for married filing jointly in the state, I'm free and clear there, but if I have itemized deductions just over that, I don't get to take them. I don't get to take them unless I itemize it over $24,000.
Do you have a sense of what the House, the members of the House, or the members of your committee are thinking about that piece?
I really feel like we're, as a committee, I think we're pretty determined to make that change, and I do think the House is determined to make that change. I think we'll be certainly somewhere in the range of 70 to 80 votes. I'd like to be closer to 84, but
yeah.
You know.
So I hope this has answered some of your questions. Stay tuned. Thank you for listening.